I am Mrs.R.Suriyadevi, Assistant Professor of Commerce, Standard 5 Extra College for Women, Sivakasi. Today we are going to discuss about GST. GST means Goods, Services and Tax. GST is a comprehensive tax levied on manufacture, sale, consumption of goods and services, under which there is no distinction between goods and services for levying tax. It is the substitute for all indirect tax of goods and services levied by central and state government. Under GST, every person is liable to pay tax on its output and entitled to get input tax credit on tax paid on its input, and ultimately the final consumer will bear the tax. France was the first country to introduce the GST as early as in 1954. Now almost 150 countries are following GST in one or other form. A dual goods and services tax system was being introduced in India from 1st July 2017.
Let's discuss about existing indirect tax structure. First, the tax is divided into direct tax, indirect tax. Direct tax is further divided into income tax and wealth tax. Indirect tax is further divided into central tax, state tax. Central tax is again classified into excise tax, service tax, customs tax. State tax is further divided into VAT, entry tax, luxury tax, lottery tax, and so on. So this is the existing indirect structure followed in India. So now we are seeing is the proposed tax structure in India. In here also the tax is divided into direct and indirect tax. Indirect tax is divided into intrastate and interstate. In intrastate, it is further classified into CGST and SGST. CGST is governed by central government, SGST is governed by state government, and interstate is further classified into IGST. It is governed by the central government. So this is the new proposed tax structure in India after the implementation of GST.
Let's discuss about proposed tax regime and new GST regime. First is the structural difference. In proposed tax regime, central government levy central taxes such as central excise duty, customs duty, and other service taxes. But the state government levy state taxes such as state sales tax, state VAT, entertainment tax, luxury tax, and taxes on lottery. But under GST, tax is levied on same base on all goods and services except the petroleum products till the recommendation of GST Council in India. Next one is basis of levy. Under GST, the basis of levy is on consumption, a destination based tax. But in the old method, the basis of levy is on manufacture, sale, or the rendering of services. The next one is registration. Decentralized registration procedure is followed in the old method. A uniform e-registration procedure is followed on the basis of PAN under GST. Collection of tax. Central excise and service tax follows the uniform procedure, but the VAT varies from state to state. In GST scenario, the uniform process and common dates for collection and filing of return is followed. Then, basic excise duty. Excise duty is charged up to the level of manufacturing in old method. Under GST, it is replaced by CGST, that is Central Goods and Services Tax, but it is charged up to the level of retail level. Then, basic customs duty. Under customs duty, it is charged by the central under the separate act. Under GST scenario, there is no change in the basic customs duty.
Countervailing duty. In case of imports, it is taxed by the center separately. But in GST scenario, it is to be subsumed under CGST, that is Center Goods and Services Tax. Next one is service tax. It is charged by the center on list of services under Finance Act on payment or provisional basis. Under GST scenario, it is to be subsumed under SGST, that is the State Goods and Services Tax, based upon the place of supply rules. Next, central sales tax, applicable at concessional rate of 2% on interstate transfers against C forms, otherwise full rate, that is 5 to 14.5%. Under GST scenario, it is to be subsumed in IGST, that is Integrated Goods and Service Tax. Next, state VAT. Exempt, except exempt items, all goods are taxed. GST scenario subsumed in SGST, State Goods and Service Tax. Next is entry tax. In current scenario, it is being charged by selected state for interstate transfers held as import in local area. But in GST scenario, no entry tax. Additional 1% of tax is to be levied on interstate supply of selected goods. Tax on export of goods and services. So under old regime, it is exempted or zero rated. In GST scenario also, there is no change. Then tax on interstate transfer of goods to branch or agent. So it is exempt against Form F under GST scenario to be taxable, but full credit available to dealers. Tax on transfer of goods to branch or agent within state. Generally exempt, depends upon state procedures. Under GST scenario might be taxable unless tin of transferor and transferee is the same. Next, cascading effect. Credit between excise duty and service tax available, but no set off against VAT on excise duty. Under GST scenario, credit available on full amount of taxes up to retailer. Cross set off of levy. Currently, set off of excise duty and service tax is allowed. GST scenario, no cross set off between CGST and SGST is allowed. Disallowance of credit on selected items. There are certain non-creditable goods and services under both VAT and SENVAT rules. Under GST scenario, no such disallowance unless specified by GST Council. Next, disallowance of input or input services used in exempted goods and services. It is not allowed under old method. Under GST scenario, no such disallowance unless falling under the negative list which is yet to be finalized by GST Council. Exemptions. Some areas enjoy status of excise or VAT exemptions, that is Northeast, Himachal areas. Under GST scenario, no such exemptions. Investment refund scheme may be introduced for existing zones and based upon the recommendations of GST Council. Levy of tax on government bodies and NGOs. Certain government bodies and non-profit organizations are being covered. Under GST scenario, it is not changed.
Let's discuss about the strength of GST. First one is avoiding of cascading effect. Dropping out the cascading effect on production of distribution of goods and services is the major strength of GST, and ultimately it will increase the GDP rate and consequently the production also increase. The next one is applicable to all goods and services. GST is applicable to all goods and services except some exempted goods. Goods are not exempted. Tobacco is not exempted from GST and it is treated as a sin goods and it will come under the category of central excise duty. Goods are exempted. Petroleum products, natural gas and other crude oil products are exempted under GST till the recommendation of GST Council in India. But some products like alcohol, electricity, real estate are completely exempted under GST. Dual taxation system. India follows a GST under dual taxation system. It is under the category of central goods and services tax and state goods and services tax.
Let's see about weakness of GST system in India. The first is non-economical. The doorstep goal is very ground level for traders and service providers. It will raise appropriation of government ways and means which are costlier than government revenue. Next, all taxes being not subsumed. So GST is a subsum of various states and central taxes like excise duty, cess, service tax, countervailing duty, but many more left which should be included like electricity, alcohol, etc. Next, diversification of taxes. GST for states and center seems to be different. Further, it can be diversified on the basis of location, geographical structure, and so on. Next, scope for increasing tax rate. Tax rate depends upon availability of a fund in states. The tax rate will be increased. The state has no power to increase the rate according to their needs. Technology issues. This system is very fond of technology, but India is a developing country where people are not totally familiar with technologies. Threats of GST in India. First is levy of additional taxes on interstate supply. Interstate supply of goods and services are considered as import and IGST will be applied 1% in addition to custom duties. Next, compensation to state government. The central government promised for compensation to laws making states for a period of 5 years. The compensation will be as 100% for first 3 years, 75% for fourth year and 50% for the fifth year. So it is possible that all states do not implement it in effective manner to get compensation. Next, banking transaction to be costly. GST is not friendly with banking sector because cost of goods become cheaper after GST and it will promote export. Presently, 14% service tax is being levied on banking transactions. GST will make this transaction more costly. Over and above, in most of the countries, banking sector is excluded from GST. Next, natural justice to be in conflict. Goods and Service Tax Council will set a benchmark for resolving the dispute on recommendations of Goods and Service Tax Council. It means GSTC will lay down the criteria for GSTC itself. It is against the principle of natural justice. Next, influence of political parties. GST is not a guaranteed in itself and it would not be influenced by the political parties and the politicians will not use it in an win-loss scheme. Challenges of GST. The first is with respect to tax threshold. The first impact of setting higher tax threshold would naturally lead to less revenue to the government as the margin of tax base shrinks. Secondly, it may happen such small and not so developed states which have set low threshold limit under current VAT regime. Next, with respect to nature of taxes, the taxes that are generally included in GST would be excise duty, countervailing, just service tax and state level VATs among others. Interestingly, there are numerous other states and union taxes that would be still out of GST. With respect to number of enactments of statutes, there will be two types of GST laws, one at central level and other at the state level. As there seems to be different tax rate for goods and services at the central level and state level, and further division based on necessity and other property based on need, location, geography and resources of each state. Then with respect to rates of taxation, it is true that a tax rate should be devised in accordance with the state necessity of funds. Whenever states feel that they need to raise greater revenues to fund the increased expenditure, then ideally they should have powers to decide as to how to increase the revenue. With respect to tax management and infrastructure, it depends on the states and the unions as how they are going to make GST as a simple one. Success of any tax reform policy and managerial measures depends on the inherent simplifications of the system, which leads to high conformity with the administrative measures and policies. Opportunities of GST. First, an end to cascading effects. This will be the major contribution of GST for the business and commerce. At present, there are different state level and central level indirect tax levies, a compulsory one after another on the supply chain till the time of its utilization. Growth of revenue in state and union. It is expected that introduction of GST will increase the tax base and lower down the tax rate and also removes multiple points. This will lead to the higher amount of revenue on both states and union. Next, reduces transaction cost and unnecessary wastages. If government works in an efficient mode, it may be also possible a single registration and the single compliance will suffice for both SGST and CGST provided government procedure, effective IT infrastructure and integration of such infrastructure of state level with the union. Eliminates multiplicity of taxation. One of the great advantage that the taxpayer can expect from GST is elimination of multiplicity of taxation. 1 point single tax. Another feature of GST must hold it is should be the 1 point single taxation. This also gives a lots of comfort and confidence to business community that they focus on business rather than worrying about the other taxation and may crop at later stage.
I am finally concluding that all goods and services, barring a few exceptions, will be brought into the GST base. There is no distinction between the goods and services under GST. Under GST, tax burden is divided equitably between the manufacturing and the services through a lower rate of tax